So in the previous class, we have started interest calculations, and as a part of it, yeah, I have forgotten, Venkat. I will activate today after the class. See, yesterday we have completed step number 1, define interest calculation types. Now, prepare account balance interest calculation. Path is same as above, or transaction code OBAA. SPRO, financial accounting, general accounting, business transactions, bank account interest calculation, interest calculation for 2 seconds, prepare account balance interest calculation. Click on new entries. Interest calculation indicator is equal to KH. This is what we have defined yesterday. Interest calculation frequency is equal to. If you press on F4, you can see 12 options. If the interest is to be calculated and posted every month, we select 01. If the interest is to be calculated and posted every 2 months, we enter 02. And if the interest is to be calculated every quarter, we enter 03. So how do we decide how frequently the interest is to be calculated? Here, the repayment schedule is contained in the loan agreement. So compulsory, we have to sign one loan agreement with the bank. So the loan agreement clearly specifies the repayment schedule. If the installment is to be repaid every month, we enter 01. If the installment is to be paid every 2 months, we enter 02. If the installment is to be repaid every 3 months, we enter 03, and so on. So here, just like that I'm using 01 every month. Calendar type is equal to G. Calendar type is equal to G. Within brackets, Gregorian calendar. Within brackets, Gregorian calendar. Then select balance plus interest. Select balance plus interest. Write down there. By selecting this checkbox, the system will display the total loan amount of loan outstanding. The total amount of loan outstanding including interest in the interest calculation. Means the system will display one separate line, right, in the interest calculation that this much is the total amount of loan outstanding including interest. So that separate line is printed in the interest calculation. Click on save. Write down the table name T056S. T056S. Now, what is this calendar type? Here, calendar type. The calendar type determines the number of days to be considered per period. Period means month, for which interest is to be calculated. The calendar type determines the number of days to be considered per month, for which interest is to be calculated. There are 4 types of calendars available for interest calculations in SAP. See, these are the 4 calendar types, right? And we cannot create our own calendar types. We can use only one of these calendar types. Remember, we cannot define our own calendar types. Here, B stands for bank calendar, J stands for Japanese calendar, F stands for French calendar, G stands for Gregorian calendar. So what is each calendar type implies? Number one, bank calendar. It uses 30 days as the basis for the month and 360 days as the basis for the year. See, it uses 30 days as the basis for the month and 360 days as the basis for the year. That means here we have taken one loan, term loan. Term loan amount is 1 lakh. Rate of interest is 12%. Right? So if you use the bank calendar, right? See, it uses 30 days as the basis for the month and 360 days as the basis for the year. That means if you are calculating interest for January, right, it calculates like this. 1 lakh into 12 by 100 into 30 divided by 360. 30 divided by 360 means actually January contains 31 days, right? But the system takes only 30 days for the month. And for the year, it takes 360 days. Similarly, if you calculate interest for February, 1 lakh into 12 by 100. 12 by 100 means 12 rate of interest, 12%, right? Then divided by into 30 divided by 360. Even though February actually contains 28 days or 29 days, if you use the bank calendar, system takes 30 days. And for the year, it takes 360 days. Then April. One lakh into 12 by 100 into 30 by 360. So for every month, the system takes the 30 days uniformly. Whatever may be the month for which you are calculating interest, system uniformly takes the 30 days for the month and 360 days for the year. So that is the impact if you take the bank calendar. Next, French calendar. See, you just look at the calendar type, French calendar. 28, right? Okay, let us go according to material. Okay, French calendar only. Okay, let us go according to system. After bank calendar, we have Japanese calendar, right? Japanese calendar, 30 by 365. From here itself, you can understand. It takes 30 days for the month and 365 days as the basis for the year. 30 by 365 means it takes 30 days as the basis for the month and 365 days as the basis for the year, right? See, Japanese calendar. It uses 30 days as the basis for the month and 365 days as the basis for the year. So, Japanese calendar. So if you calculate interest for January, right? 1 lakh into 12 by 100 into 30 divided by 365. Then if you calculate interest for February, 1 lakh into 12 by 100 into 30 divided by 365. And if you calculate interest for April, one lakh into 12 by 100 into 30 divided by 365. Like that, right? It calculates interest. Every month, it takes the number of days uniformly. But only for the year, it takes 365 days. So the difference between these two methods is, two calendars is only with reference to denominator of the year. Okay. Then you have French calendar. See, French calendar, 28 comma, dot, comma, 31 divided by 360. Means the system takes the actual number of days in a month as the basis for the month and 360 days as the basis for the year. See, French calendar. It uses the actual number of days in a month as the basis for the month and 360 days as the basis for the year. That means, again, French calendar. So, if you calculate interest for January, 1 lakh into 12 by 100 into January actually contains 31 days, right? So, 31 divided by 360. Okay. Then February. 1 lakh into 12 by 100 into 28 divided by 360. 28 divided by 360. Then April. 1 lakh into 12 by 100 into 30 divided by 360. That's how, in the case of French calendar, the system takes actual number of days in a month as the basis for the month and 360 days as the basis for the year. Right? Then we have the Gregorian calendar. Fourth one is G calendar. G means Gregorian calendar. So 28 comma dot 31 slash 365 means the system takes the actual number of days in a month as the basis for the month and 365 days as the basis for the year. So January. 1 lakh into 12 by 100 into 31 divided by 365. Actual number of days in a month as the basis for the month. Then 365 days as the basis for the year. Then February. 1 lakh into 12 by 100 into 28 divided by 365. Then April. 1 lakh into 12 by 100 into 30 divided by 365. So these are the differences between different calendars. According to client requirement, we can select any calendar. But remember that calendar type can be any one from these 4 calendar types. Click on Save. So just like that, I have taken calendar type G. Then define reference interest rate. So what is the reference interest rate? It is the identification for which we assign the real interest rate. That is 12%, 13%, etc. The reference rate of interest is assigned to the interest indicator, and we can define any number of reference rates of interest. See, we have taken 10 term loans, right? So on some term loans, we are paying 10% rate of interest. On some other term loans, we are paying 11% rate of interest. On some other term loans, we are paying 12% rate of interest, right? So for 10%, we define one identification. For 11%, we define another identification. For 12%, again, we define another identification. These are called reference rate of interest. Normally, for every actual rate of interest, we define one identification that is called reference rate of interest. The reference rate of interest, right, are linked to, will be assigned to interest indicator later on, right? Write down, continue the paragraph. The reference rate of interest is defined at client level. The reference rate of interest is defined at client level. Is defined at client level. Full stop. For every actual rate of interest we pay to the bank, for every actual rate of interest we pay to the bank, we define one reference rate of interest. We define one reference rate of interest. So first let us do the step, then after 2-3 steps you can understand what the purpose of this different reference rate of interest. Path is same. See, up to bank account interest calculation path is same. After that, interest calculation. See, define reference interest rates. Table name T056R. Table name T056R. Click on new entries. Reference rate of interest is equal, give some number or name, KH1. Reference rate of interest is equal to KH1. Long text is equal to 12% reference rate of interest. Long text is equal to 12% reference rate of interest. Description also 12% reference rate of interest. Okay, long text or short text, whatever it is. Date from 1/4/2022. So this reference rate of interest is applicable from 1/4/2022. Currency INR. Click on save. Click on save. And now do one thing. Another step. Add one more step. Add continue. Click on next entry button. So some of the term loans we are paying 11%, right? So for 11% also we define another difference rate of interest. Click on next entry button. Reference rate of interest is equal to KH2. Long text is equal to 11%. Reference rate of interest. 11% reference rate of interest. Description also or short text. 11% reference interest rate. Date from 1/4/2022. Currency INR. Click on save. Suppose you are paying 13% on some of the term loans. In that case, for 13% also, we define another reference rate of interest. Then define time-dependent terms. So first I will explain what is this time-dependent terms. Then I will show you how to define. Say, for example, we have taken one term loan from State Bank of India. We have taken one term loan from State Bank of India, right? And the rate of interest we are paying is 12%. Let us assume that we have taken this term loan on 1st January 2018. Let us assume we are in the fiscal year 2018. So on 1st January 2018, we have taken one term loan, 1 lakh rupees, 100,000 rupees. When we take the term loan, the entry we post is debit cash account and bank account, credit SBI term loan account. So that is posted to credit side of term loan account. By cash, 1 lakh rupees. Then every month, the installment is 10,000. Every month, installment is 10,000. Okay. So on 1st February 2018, we paid first installment. When we pay installment to the bank, the entry posted is debit term loan account, credit cash account or bank account. Normally in the real time, we don't use the cash account, we use the bank account only. So to cash account, 10,000. Okay, now after this, we did not pay any installment. We did not pay any installment. Okay, then with these two transactions in the term loan account, I want to calculate what is the total amount of interest you have to pay to the bank up to 31st December 2018. Right? See, we have one credit item, 1/1/2018. We have one debit item, installment payment, 10,000 on 1st February 2018. After this 1st February 2018, we did not pay any other installments. Now with this, I want to calculate interest, right? Up to 31st December 2018. How much total interest you have to pay to the bank? So normally, how do we calculate interest in this case? Here, listen to me carefully. On 1st January 2018, you have withdrawn from the bank 1 lakh rupees. Okay. Then on 1st February 2018, you have paid 10,000. That means what? From 1st January 2018 till 31st January 2018, we have used 1 lakh from the bank. We have used 1 lakh from the bank, right? That means from 1st January 2018 till 31st January 2018, you have to pay interest to the bank on 1 lakh for 1 month at the rate of 12%. So on 1 lakh for 1 month, 1 lakh into 1/12 into 12 by 100, which comes to 1,000 rupees. Clear till now? Then after this first installment, we did not pay anything. That means from 1st February 2018 till 31st December 2018, we have used 90,000 from the bank. So from 1st February to 31st December 2018 means for 11 months. We have used only 90,000, right? So on 90,000 for 11 months, right? 90,000 into 11/12 into 12 by 100, 9,900. So the total amount of interest you have to pay to the bank is 10,900. Here, I assumed something. This installment does not contain interest. This total amount is towards the principal. That's what I assumed, right? In that case, on 90,000 for 11 months, 90,000 into 11/12 into 12 by 100, which comes to 9,900. That the total amount of interest you have to pay is 10,900. This is how we calculate interest normally. But SAP calculates the interest separately in a different way. Here, SAP calculates interest separately on the credit line items and the debit line items. And the net interest is posted. Why? I will tell you. Here, the term loan account is just similar to bank account, right? So in the bank account, credits are withdrawals. Credits are withdrawals, right? Debits are deposits. Why so? In our books of accounts, when you deposit something into bank, we debit the bank account. When you withdraw from the bank, in our books of accounts, we credit bank. That's why in the bank account, credits are withdrawals, debits are deposits. So on the withdrawals, we have to pay interest to the bank. And on the deposits, we have to receive interest from the bank. Okay? Then on 1/1/2018, we have withdrawn 1 lakh from the bank. That means on 1/1/2018, from 1/1/2018 till 31st December 2018, for 1 year, right? We have to pay interest to the bank on 1 lakh at the rate of 12%. So on 1 lakh for 12 months. 1 lakh into 12 by 12 into 12 by 100, which comes to 12,000 rupees. So this interest you have to pay. Interest paid means expense, right? Of course, you have an interest you have to pay. That's an expense, right? Expense means debit. So SAP calls this as debit interest. So debit interest means what? Interest on credit items of the term loan, right? So 12,000 is called debit interest, right? Within brackets, write down. Within brackets, interest on credit items of the term loan. Interest on credit items of the term loan. So this is called debit interest, which you have to pay. Then on 1st February 2018, you have repaid 10,000, right? So on the, it is debited, right? That means it's a kind of deposit. So on the deposit, we have to receive the interest. So on 10,000, from 1st February 2018 till 31st December 2018, right? We have to receive the interest on 10,000 for 11 months. See, don't think that you receive the interest as such, right? Because this 10,000 is to be reduced from the term loan, no. This 10,000 is to be reduced from the principal, right? That's why you have to assume. Just to make you understand, I told you that we have to receive the interest. So on 10,000 for 11 months, 10,000 into 11 by 12 into 12 by 100, which comes to 1,100 rupees. So this interest we have to receive, right? This is called interest received means revenue. Revenue means credit. So this is called credit interest, right? Within brackets, interest on credit items. Sorry, interest on debit items. Interest on debit items. So we have to pay 12,000 and we have to receive 1,100. So how much is the total amount you have to pay? 10,900 rupees. There is no difference between interest amount. Only the way of calculation is different. So in SAP, what happens is SAP calculates the interest separately on the debit items and credit items, and the net interest is posted. Why? See, now normally what happens is the banks will apply the same rate of interest on the debit items and credit items, right, in the term loan account. But sometimes there may be a need to apply separate rate of interest on debit items and credit items. For example, right, the bankers are charging 12% on the term loan withdrawals, that is credit items. But on the repayments, they are giving only 11%. That means what? On the credit items, you have to use 12%. On the debit items, you have to use 11%. So for that purpose, what we do for the debit interest, right? We assign the reference rate of interest to KH1, for which we create 12%. And for the credit interest, we assign the reference rate of interest KH2. Remember, internally, SAP calculates interest separately for debit items and credit items internally, but net interest is posted by the system. And the interest rates may change from time to time. So it depends upon the time. That's why SAP calls this as time-dependent terms, nothing else. While doing the step also, I will explain. Path is same as above. Define time-dependent terms. Table name T056A2. T056A2. Click on interest. Interest calculation indicator is equal to KH. This is what you have defined the first step. No. Bank will not give you any interest, right? That's what I told you. Normally, the installment is reduced from the principal amount, right? That means what? They are giving interest. That interest on that installment to principal amount is to be reduced or no? So 56A2, T0 56A2, table name T0 56A2. Always the table names are to be written in the capitals. Currency INR. Effect from 1/4/2022. Sequential number 01. That means first term. Term is equal to debit interest, balance interest calculation. Debit interest, balance interest calculation. Within brackets. So debit interest means interest you have to pay. That means interest on credit items. Debit interest within brackets, interest on credit items of the term loan. Interest on credit items of the term loan. Comma. Select from F4. Select from F4. So you cannot type manually. Reference rate of interest is equal to KH1, 12%. Click on save. Again, click on next entry button. Interest calculation indicator is equal to again KH. Currency INR. Effect from 1/4/2022. Sequential number 02. Term is equal to credit interest balance interest calculation. Balance interest calculation means interest type, right? Balance interest calculation means interest on GL account balances. Credit interest, balance interest calculation. Within brackets, interest on debit items of the term loan. Interest on debit items of the term loan. Within brackets, select F4, select from F4. Select from F4. Reference rate of interest is equal to KH2. So normally, sorry, KH1. Normally, on the credit items, they charge the same rate of interest. On the repayments also, they reduce the same rate of interest. Suppose you want to apply 11%, we assign KH2. But that is not normally happens. Now, enter interest values. Path is same as above. Enter interest values. Table name T056P. T056P. Click on new entries. Reference rate of interest is equal to KH1. Valid from 1/4/2022. Interest rate is 12%. Interest rate is 12%. Similarly, you have to assign 11% to the KH2. Write down, it's not there in the material. Reference rate of interest is equal to KH2. Valid from 1/4/2022. Interest rate is 11%. Click on save. Now, so when the interest is calculated, the entry to be posted is debit interest account, credit term loan account, right? So we have to create two GL accounts. Creation of interest account. Transaction code FS00. See here, we have an account group, interest, right? We have an account group interest, and the defined number range is, right, 4,400,000 to 4,499,000. So I'm starting with 4,400,000. GL account is equal to 4,400,000. Company code SSKH. Go to menu GL account, create. The account group is equal to interest. Select P&L statement account. Select P&L statement account. Start text is equal to interest account. GL account long text is also interest account. Go to control data tab. Account currency INR. Select only balances in local currency. Select line item display. Sort key 001. Then go to create bank interest tab, field status group G001. Now, creation of term loan account. Transaction code FS00. It is not there in the material. Transaction code FS00. So here, the term loans are always secured loans. So we have an account group, secured loans, and the defined number range is 1,300,000 to 1,399,000. So I am taking 1,300,000. GL account is equal to 1,300,000. Just a minute. Company code SSKH. Go to menu GL account, create. Under type and description, the account group is secure loans. The account group is secure loans. Select balanced account. Short text is equal to HSBC term loan account. Assuming that we have taken the loan from HSBC bank. Short text is equal to HSBC term loan account. GL account long text is also HSBC term loan account. HSBC term loan account. Go to control data tab. Account currency INR. Select only balances in local currency. Select line item display. Sort key 001. Then go to create bank interest tab. Field status group G001. See, interest calculation information, the company code. Interest indicator KH. Interest indicator KH. I told you, no, we assign all the values necessary to calculate interest to the interest indicator, and the interest indicator is assigned in the term loan account to master account. Now we have assigned interest indicator KH in the term loan account to master account. Concept. Now, write down here. some space is there against the GL account, right? Here you can write it down. We have assigned the actual rate of interest 12%. We have assigned the actual rate of interest at 12% to the reference rate of interest KH1. To the reference rate of interest KH1. Full stop. The reference rate of interest KH1, the reference rate of interest KH1 was linked to debit interest and credit interest terms, was linked to debit interest and credit interest terms under the interest indicator, KH under the time dependent terms. And the interest indicator KH was assigned in the term loan account master record. Then, with the help of these links, the system will apply 12% rate of interest. The system will apply 12% rate of interest on the debit items and the credit items of the term loan. On the debit items and the credit items of the term loan. Look at the screen, please. Here in the step number 5, enter interest values, right? See, enter interest values. For this, for KH1, we have assigned 12% rate of interest, right? Then in the time dependent terms, we have defined 2 terms, right? See, already we assigned 12% to the reference rate of interest KH1, right? This KH1 was linked to debit interest, balance interest calculation. Debit interest means interest on credit items, right? This link was provided under the interest calculation indicator KH. So the KH was assigned in the term loan account. So on the credit items of the term loan, the system will apply 12%. Okay. Similarly, KH1, already for KH1 reference rate of interest, we have assigned 12% rate of interest. That is assigned to linked to credit interest balance interest calculation. Credit interest means interest on debit items. So this link is provided under the interest indicator KH. And the KH was already assigned in the term loan account. So on the debit items of the term loan account, the system will apply 12%. In addition to that, right, we have linked interest calculation frequency 01, right? And we assign the calendar type G in the interest indicator, right? So this interest indicator again was assigned in the term loan account. So these two values are also applicable to term loan account. So on this term loan, every month we calculate interest, right? And the system takes the number of days, actual number of days in a month as the basis for the month. And 365 days as the basis for the year. So this is how the system finds the rate of interest to be applied on term loan account balances. This is in case of one term loan. Suppose you have taken 4 term loans, and some of the term loans carry the same rate of interest, and other term loans are carrying on different rate of interest. In that case, how to configure for that? That we will see in the next class. See, next class is on Indian Day, Tuesday, 17th, right? So 14, 15, Saturday, Sunday, right? Anyhow, we don't have any classes. Then 16th is the festival, right? Actually, 14, 15, 16 are the Pongal festivals. So 16 additionally, I'm giving the holiday on 16. So again, we have the class on 17. In that class, we will discuss how to configure for multiple term loans. And if you have any questions also, please ask them in the next class, because I'm preparing to go to my native. I am also going to my native place.